This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
Welcome to The Interest. I'm Mike Savino.
And I'm Christine Stewart.
And Christine, it was your turn to have a vacation weekend, but it sounds like you had a bit of an adventure getting back.
Air travel is always an adventure these days. From the time I went to the airport and got there, my flight was delayed 7 times. Wow. Mechanical issues to staffing issues, I think we had it all.
Well, I'm glad to hear that you made it back safely, and I hope you had a good time at least.
I did, thank you.
And of course, don't put away that luggage, because 2 weeks from today, we'll be touching down in Vegas for Originator Connect.
I know, I don't know about you, but I'm so excited to meet all the people in the industry and hear what they have to say. There's going to be some great discussion around non-QM, the latest technology, and even whether originators should work with private lenders. Speaking of which, we asked some experts what they think about the role private lenders are playing in the housing market.
For both mortgage brokers and loan officers too, that are seeing, decreases in the amount of refinance activity as well as purchase activity on the residential side, they're taking the opportunity to really work with those private investors to be able to facilitate those transactions.
The impact private investors are having on the housing market might be controversial, but for lending officers, it presents an opportunity.
It's really a great opportunity for them to boost their transaction volume and make more money.
The rental market is growing, and even with interest rates at near 6%, RCN Capital executive Erica LaCentra says property is still a great investment.
There's a lot of folks that, need to rent and have access to even rental properties, and investors are making, that a viable option for folks too. And as I mentioned too, just looking at the numbers, they're not taking up as much market share as many people feel in the space and taking away those first-time home buyer opportunities.
Those looking for opportunities can make their own through a new platform called Invone.
Instead of having, an institution telling owners, hey, I'll give you money and I'll dictate the terms to you, I thought owners could put their real estate up there and say, hey, these are the terms I'm offering to investors. Investors, would you like to invest in this?
Lavi Brakeman runs Invone, a platform that allows people to invest in a property and get a return on that investment.
You need to be able to go out there and raise the money on the platform. And if you can't just put it up there and expect the money to come in.
Invone is a platform that allows a bunch of people to invest in a property together.
Homeownership is really expensive, and it's getting more and more expensive.
Interest rates seem to have plateaued, but could go up.
Honestly, with rates even at 6%, this is truly just a correction. 6% is still affordable to be able to continue to make money, whether you're purchasing a rental or you're purchasing a flip at this time.
For the Mortgage News Network, I'm Christine Stewart.
You still have time to sign up for Originator Connect in Las Vegas, and if you want to hear more from private lenders and how you could work with them, then be sure to register for the Private Lender Forum scheduled on August 18th at originatorconnect.com. In other news, home prices saw their largest single-month cool down in 50 years as inventory got a huge boost. According to Black Knight's monthly Mortgage Monitor report, listings grew by more than 80,000 units, or 22%. That's the biggest one-month jump in housing stock in 12 years. And with inventory going up, it's no surprise that home prices slowed their historic increase. The annual rate of appreciation in June was just over 17%. That's down 2 percentage points from May's rate, and that's the most significant single-month drop since 1970, according to Black Knight. In fact, Black Knight Data and Analytics President Ben Grabowski says that it isn't even close. For context, during the 2006 downturn, the strongest single-month slowing was just 1.19%, and about what we saw last month, and June topped that by 66%. Still, inventory in June was 54% below the monthly average that we saw from 2017 through 2019, and that's keeping prices from coming back down. Home prices would need to continue to slow down at this pace for another 6 months for annual appreciation to reach the normal rate of 5%.
And finally, construction spending in June fell by just over 1% on an annual basis when compared to the prior month. According to the Census Bureau, contractors were on pace to spend $1.76 trillion on construction for the year. In May, that number was $1.78 trillion. The biggest fall came in private construction. June's annual pace of $1.42 trillion was a drop of 1.3% from May. Meanwhile, spending on public construction was at an annual pace of $345.9 billion, down 0.5%. The drop comes as activity is also falling. Construction of single-family homes fell by 3.1% in June.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.